Hi, everybody. This is Gary Dean, and this is our nightly video report for Thursday, January 26, 2017. The hardest part about today was trying to keep your eyes open. It was a really, really boring day, and we had I took my second half of my position on the short side. Per the morning notes, I said it was going to be anywhere from the 2300 up to the 2307, and once I saw the 2300 going up and it wasn't busting through, I just took it from there. And I'm in, and we'll see what plays out. There's a lot of reasonings to to be thinking that we possibly are hit a top or are very close to it. So, reasonings for the short. Here's the daily divergences here. We have a daily bearish pattern. We came back up, hit the corner of the bearish rising wedge. So, from a bigger picture, this is the reason why I'm really just interested on the short side. Once this does top, I'm anticipating that we're probably going to get a move anywhere between, well, it should be fairly quick too, but really the first stop would be, say, the 2155, but the more likely, as far as target wise, will be anywhere from the 2055 down to the 1913. Now, the reason why I'm saying that has to do with our wave count here, and you can see we have the 5 waves up. So just using the last, this right here, hang on one second. Oh, sorry. So this right here that I'm showing you the 5 waves, that's actually coming from this last leg up right here. So this is this is your fifth wave up on a bigger time scale. And when we go into the 60, you can see that we have the clear 5 waves. We have the bearish divergences, very overbought. And just from this wave structure, we're looking at a target anywhere from the 2192 down to the 2130. So we have two separate, a longer term pattern as well as a little bit of a shorter term pattern that are looking lower with divergences. Now, when we take, well, let me go back to that one more time. So really what the bears have to do. So instead of you guys, I mean, I've been pretty clear on the direction that I believe the bigger point move is, and it's to the downside, and that's why I'm positioning my portfolio like this. But really, let's just go over what what has to be done, because the bulls are doing a really good job right now. So the bears need to push it through this little congestion right here. That's right around that 20, let's say the 2290. If they do that, that's when I believe they're going to come and close this gap. Now, I've mentioned that, these gap ups at the top, they're almost 100% failure rate. And this is what I'm talking about. So you had a big move up, and then what do? They gap it up here. And once it gaps up, then what happens is it fails. And like I said, this isn't the first time that they've done this here. And what I'm considering a failure is where they gap it from, price comes below that gap. So here you can see another one. After a long move, they gapped it up, and then we came back down and went below that gap. So it's something that it hasn't been really bull friendly with this gap up towards the end. Plus, we have the bearish divergences, and we know we have sentiment extremes. So again, that's why I'm looking really for the short side, and why I think it's going to be a decent trade. It's just a matter of whether we topped or not. And I'm not willing to, to be pounding the table that we did. There's a very good chance we're close to it if we didn't. But you have to leave the door open because the momentum is still on the side of the bulls. So if we take a look at the 15-minute chart here, you can see this gap up here, and then we went up. We now have bearish divergences on the 15-minute chart as well. MACD has already crossed. Momentum is extremely high up here, and it's going to take some time to burn that off. So just from a shorter, let's say retracement wise or support, so from the low that we just saw on the 23rd up to the 26th, which was today, the high, you can see that we have the moving average that's right at the 2276, and we also have a 50% moving average. So this may be a decent little first target If they move up, then we have to just keep an eye on this 2303 and the 2307. So if they had higher, and you want to be layering in, that would be the area. Um, I'm I'm good to go right now. I think I'm as short as I want to be right now with one position. And like I said, maybe they're going to put me through some stress. If it is, it's fine. I've been through that before. But just the magnitude of this move and where we are as far as time and sentiment, it's something that I really want to just be positioning stuff on the short side. So again, today was as boring of a day that you possibly can get. We had the move up to the 2300. Party hats came out, and then we had the 4 point range the entire time, and it was torture watching and just doing absolutely nothing. The minute that we looked like we were going to break down, they'd bid it back up. The minute they looked like they were going to break out, they would drop the bid. So it was pretty boring. But like I said, the longer that they're holding this like that, probably the sharper of a move to the downside we're going to see. But that's really about all I have. So if it heads higher, you guys keep an eye on that 2303 and the 2307 if you want to continue to build a short position. I'm good, and I think within the coming weeks we're going to be looking at a lower market, and it's probably going to be a really good buying opportunity because I don't think we're heading into a bear market. It's just that we're going to have to release some pressure because things are getting a little overextended. So with that, have a great night, and I will talk to you guys tomorrow.